Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you very much for joining me. Well, this morning the Australian dollar has entirely succumbed to the bearish pressure. As the greenback strengthens, the support zone is now worn away at 69.40 and this has exposed the region of 68.05 or 68 cents. Yesterday, disappointing data from NAB Business Conditions Index for April wasn't adding much help after declining to 3 from 7 previously. Later today, we do have the Australian Westpac Consumer Confidence Index for May and Q1 Wage Price Index, followed by China's April retail sales, industrial production, and investment data. Tomorrow, we also have the Australian April employment data too. So with the support taken out at 69.40, the foundations to the Australian dollar have now broken, and therefore the bears likely to come back in bigger numbers and now looking towards the region, as I mentioned, immediately at 69.15 and 68 cents as an objective. Resistance is now seen at 69.65 to 75. Well, since the second rejection of 112.55.65, the bears have kept in focus and now challenging the level of 112. It is ascertained that the market could actually break down further to 111.65 or lower to 110.70 to 85. With the bears still holding the fort, the fact is that any challenge to the upside should fail. Dollar yen, since breaking through the support region of 109.45, hasn't staged any significant moves. After trade fears, though, with the US and China have cooled slightly after President Trump said that he could have a very fruitful meeting at the G20 summit next month with his Chinese counterpart, President Xi. Looking from a technical point, though, is the market looks from resistance at 109.85 minor and capped 110.55.65. Now, with the level of 109.45 broken, does give me a view towards the region of 107.50 to 90. So I do expect to see further yen strength in the coming session and this week. Well, since the pound slipped through the support level of 129.65, as the market has now been reinstated to the downside, with the immediate target seen around 126.70 to 85. Though we do need to see a break of 128.80 to initiate the bearish pattern further. We are a little bit oversold. We are trending though from the ADX, and the MACD has married up with the RSI. So this should put further force on the downside, with the resistance seen at 129.55 as minor, above 130.30.35. The gold, since breaking above the level of 1,288, hasn't staged any significant moves, and still at this stage contained by the resistance of 1,303 to 05. I do expect to see further bullish implications as the market does strengthen towards the upside since the break of 1,288, but we do need to clear the level of 1,311. This would initiate further bullish move to 1,320 to 24. Overnight, there was reports that further attacks on the Saudi Arabian oil industry for the second day, that is. Now, further investigation needs to be put into this to see who's actually taking these strikes. But nevertheless, the market has actually stayed a little bit of a recovery in front of that level of $60 a barrel. The bearish outside range day, not confirmed. And therefore, from a technical point, we could still see the market push up towards 62.80 and on to $64 a barrel. I'm bullish while we maintain above $60. Well, that wraps up for today. Thank you very much for joining me. And as always, look out for the intraday report. And I hope you enjoy the great start to the new day.